have you ever found yourself daydreaming about ditching the 9 to 5? Maybe packing up and moving somewhere your money goes a lot further? Well, today, we're not just dreaming. We're actually building the blueprint for a portfolio designed to do exactly that, to generate a really significant income stream and help fund that financial freedom.
All right, before we dive in, we've got to do the important legal stuff. Just a quick heads up, this is all for educational purposes. It is not financial advice, so you'll definitely want to chat with a qualified professional before making any investment moves. Okay, with that out of the way, let's get to the good part.
I want you to just think about this for a second. What if your portfolio wasn't just this thing you hope grows over time, but what if it actively paid you a monthly salary? I mean, enough to cover everything. Your mortgage, groceries, maybe even fund that dream of living abroad in a sunny new country. That's the powerful idea we're going to unpack today. We are talking about targeting a potential annual yield somewhere in the neighborhood of 8 to 12%. Now stop and compare that to what you'd get in a typical savings account. It's not even close. On, say, a $500,000 portfolio, that could be $40,000 to $60,000 a year in cash flow, an income that could literally change your life and your entire retirement timeline. So, you might be asking, if this is possible, why isn't everyone doing it? Well, it's because of something I like to call the financial freedom gap. And that's the space between where your traditional retirement savings are headed and that bigger, more exciting goal you have, like retiring a decade early or becoming an expat. Here's the core of the problem. Your standard, safe investments, well, they often don't even earn enough to beat inflation. So the money you've worked so incredibly hard to save, it could actually be losing its power to buy things year after year. To close that freedom gap, we're going to need a much more powerful income engine. Okay, so how do we build this engine? Let's start with our first really powerful tool. It's called a covered call ETF. Now, I know, that might sound a little complicated, but trust me, the idea behind it is actually incredibly straightforward and really, really effective. So, a covered call ETF is pretty clever. It does two simple things. First, it owns a bunch of stocks, just like any normal ETF. But here's the magic trick. It then sells contracts on those stocks called call options. In exchange for selling those contracts, the fund gets paid cash right up front. And that cash payment, my friends, is the key to our income stream.
Honestly, the best way to think about this is like you're renting out the stocks you own. For real, you get to collect a regular rental fee. That's the cash they get for selling the option. The only catch is that you agree you might have to sell your stocks if they hit a certain high price. But for someone who's focused on income, that regular rent check is exactly what we're looking for.
And the real beauty of using an ETF for this is that the whole thing is done for you. The fund manager handles all the nitty-gritty, buying the stocks, selling the options, collecting all that cash, and then they just send that income directly to you, usually every single month. It's designed from the ground up to be a cash flow machine. Now, covered call ETFs are a fantastic foundation for income. But if we want to really kick things into high gear, we can add another tool to our kit, something called business development companies, or for short, BDCs. So, what on earth is a BDC? Well, put simply, these are companies that lend money to and invest in the real engine of the economy, those small and medium-sized businesses that are often too big for a local bank, but still too small to be on the stock market.
Think about it this way. BDCs basically fill a sweet spot that the giant banks often ignore. They provide that critical funding to growing Main Street businesses, and in return, they earn pretty high interest rates on those loans. And the best part? They are structured to pass most of that profit directly to their investors, to us, as high-yield dividends.
All right, so we have these two really interesting tools. How do we actually put it all together into a portfolio that works? Let's get practical and look at some of the actual building blocks you could use. Now, here are just a few examples to get you started on your own research. We've got some common tickers here for investors in both the US and Canada. So for BDCs, you might look at something like BIZD in the States or INCM in Canada. For covered calls, there's QQQI in the US or something like HDIV up north. And please remember, this isn't a shopping list. It's just a starting point for your own homework. So, a sample portfolio could look something like this. You could dedicate a pretty big chunk to covered call ETFs for that steady, consistent income. Then you add another slice for BDCs to give it a little extra yield. And maybe you keep a smaller piece for other income ideas. The whole point is to diversify your income sources, to make your cash flow that much more dependable. Okay. It is super important that we talk about this next part. As any experienced investor will tell you, there's no such thing as a free lunch. Higher yields almost always come with their own set of risks. So it's absolutely crucial we understand the trade-offs that come with this income-first strategy.
So let's be totally upfront about the deal you're making here. With covered calls, you're giving up some of the explosive growth you might see in a runaway bull market. In exchange, you get more consistent cash flow right now. And you have to remember, these are still tied to the stock market. If the whole market takes a nosedive, these will go down too. This kind of strategy really has its moment to shine when markets are just kind of flat or drifting sideways, because that's when that steady income becomes the undisputed hero of your portfolio.
And that brings us right back to the only question that really matters. Because this isn't just about spreadsheets and ticker symbols, it's about what this income can actually do for your life. So I'll leave you with this. What would it mean for you? Would it be more time with your family? The freedom to travel the world? Or maybe just the peace of mind to finally start that passion project you've always dreamed of? What would financial freedom truly unlock for you?